How to minimize short-term capital gains for tax. So first of all, do you have a tax team? And if you don't, you need to use our team. And as you get into short-term or long-term capital gains, again, you need a tax team. As you start investing, it's going to become more and more important. So what I'm going to share with you today is just how do you use smart investing timelines within a year, not a year, and I'll talk about what short-term gains definition is in a moment. The next thing is how to apply strategic deductions, my favorite thing to do, and how do you use those within corporate structure. And then last, how to avoid the pitfalls, just the common pitfalls of taxes. And so many of you overpay taxes. I call taxes like the invisible pain of most of your formula in your family because you're just used to having it taken out of your paycheck. So then you think, well, how do I pay less? Well, the obvious is get paid less. And you say, well, I make $200,000, or I make $300,000, I make $100,000. Your company needs to make money because you're taxed. So you need that offset of a company. How do you use smart investment timing? Keep your investments for over a year, so then you don't get into the short-term problem. You can also write them off as losses, but again, without a smart tax team and corporate structure team, you could be cutting yourself short in doing that. And then the last that's kind of recommended, but is, defer the sale of whatever you're selling, whether it's real estate or a business, until you have a lower tax year. Well, that's not as predictable until you're into the year. So I think it's a bigger plan. And what we do with our clients is we plan a larger corporate structure so we know that the tax is deep within the year and you have multiple tax year ends. So we use contractual relationships to actually offset all of that. When it comes to short-term capital gains, typically most people are looking at either stock or real estate in those categories. So again, you've got to time the sale of those investments, especially with stock. I see people sell off stock at a massive, capital gains issue. And the only way we know how to offset it is you got to buy some real estate or gas and oil or aviation, some big depreciating asset against it. Now, the next thing is how to use deductions. So contributing to a tax advantage account, whether that's a solo 401k, 401k, Roth, HSAs, health savings account are phenomenal as a deduction. So the more you make, the more you contribute, and those numbers have gone up. I mean, in some of those qualified plans, you can contribute as much as $150,000 tax-free before you have to go to the tax line. So how you're structured is critical. Those of you that are high W-2 income earners and you don't have any corporate structure, a lot of these strategies won't even work because you have to live corporate life. So to that point, I'm going to give you tickets, as many as you need for your family, even maybe have your accountant come because we'll teach them a few things. And the Millionaire Intensive is about learning how a 3 to 5 year plan works. What is a gap analysis? So I'm going to give you also 3 chapters of the book. Call our office, walk through your situation. We'll talk about how we have solutions to help you. So living corporate life is a huge piece of deduction strategies. For example, you personally can't write this off, but your company can. You personally can't have an HSA, well, a little one, but if you're already employed and you get your health plan through there, it doesn't make that much sense. Your company needs the HSA. Your company needs the qualified plan. Your company needs to write off a ton of deductions that you used to pay personally. So we're going to move you to living corporate life, keep as minimal over here as we can, and then you watch your investment timing to make sure you have a more thorough plan. Having a tax plan is active engagement, meaning you're involved in it. You're meeting quarterly. I meet almost weekly at the end of the year. But my Q3, right, which is October, November, December, I'm meeting weekly, if not every other week, with my tax team and my investing team to pull down as much as we can in taxes through deductions and strategic investing. And that does sometimes looks at some of those sales and say, let's sell short, sell now, because we can actually take a loss. And you say, why would you take a loss if you want to win? Well, again, that invisible pain, are you just used to overpaying taxes? It doesn't make sense. There's so much I want to teach you. I want you to subscribe to the channel. Be here 5 days a week. Look at that search bar, look at the playlist, and start, typing in arbitraging debt, credit card use, how to use corporate structure, how to use trust, not just a will. I have so much content, and if I don't have content that you're looking for, go to the comment section. Talk to me, tell me what you want me to record, and I'll be right back out here to do it. Because what you really need is an entire team. You need a plan and a team for the rest of your life. Money in business is a huge part of your life, and most people inherited all their behaviors. They never stopped and said, I'm going to learn this, because there's no school you're going to go to. This school is called life and how you're living it, how you pay bills, whether they're deductible or not, how you invest, how you move, how do you make money. If you live within your means, good for you. I want you to grow your means and go big or go home. And again, this is a family-friendly channel, so anyone 5 years old and up should be here. Put in their own independent emails, put in their own independent cell phone numbers, so even your kids get my notifications dropped. What a fun week where all of you are listening to 5 videos, and once a week have a family dinner night talking about what you learned and what are we going to do in our family about money. That's how you build a legacy. Those are the values, the roots, what's important to you. Like, it's not negotiable whether my kids are going to be entrepreneurs and live in this life. They may have jobs along their career, and I had a job at Chevron for a little minute just to teach you as your growth. But once you live in this entrepreneurial corporate life, you don't go back. So those of you who are serious about taking command and taking control instead of being kind of victimized by the system, learn, lean in and learn. The biggest pitfalls of taxes is lack of corporate structure, lack of asset investing, and asset selling. A lot of you are using a team where you're parking your money, praying to God they take care of it through real estate syndications or oil and gas syndications or IPOs. All of that is public. I do almost everything alternatively private. So it's up to you how you do your money rules. You got to dig in. My 3rd book, the Wealth Cycle Investing book, go get it on Audible, get it on Kindle, get it where you need to get it. It is my greatest book and probably the only book on alternative investing. So you start understanding money rules so you can plan a bigger tax structure around your life structure. A lot to talk about. When you have questions, you go to askloral.com, ASKLORAL. Ask a question, make a request. We'll be back tomorrow.